Hey, what's up, BobMortgage Nation? All right, crazy busy week this week, and nobody was available to ask me any questions, but you're in for a treat for this 23rd episode of the Ask Bob Mortgage Show. I got Kelly Sindler with We Connect DFW Compass Real Estate asking me questions so I can get you some answers. You have questions, I have answers. Great question. What I want to be able to do is give you world life experiences that I've been going through.
Hey guys, Kelly Sindler here with Compass Real Estate, We Connect DFW team. I'm here again with Bob Mortgage, #1 mortgage guy.
Yeah.
And bringing you episode 2, right?
We are, episode 2.
Mortgage myths debunked.
I like
Say
it.
that again 3 times. We have some more questions.
I'd rather answer questions than try to say that 3 times.
I think so. So here's some more questions that I hear out in the field every single day.
Okay.
First one, how long do I have to be at my jobs to qualify for a loan?
Okay, so how long do you have to be at your job?
Right.
So it'll depend. So let's say they're a student.
Okay.
Okay, and they're transitioning into the workforce.
Right, exactly. We've just started a new job.
Right. So we're going to count their schooling as history.
Really?
Yes. So we're going to look at, so especially like if you go for your degree and then you come out and you take a job within your field, right?
Okay.
Yeah, we're going to look at that and we're going to say, okay, that time in college, right, will count for work history, and then you just basically need to be on your job. Start your job. Let's get a pay stub.
Wow.
Start your job, get a pay stub, make sure that we have that income coming in, and that right there is going to be the time that you need. So less than 30 days. Okay. Wow. Yeah, it can happen quick. But let's say you're out there already in your workforce.
Okay.
And you're working at a company and you decide, hey, there's a better opportunity. And you want to go take that opportunity. That's awesome. We're going to be okay with that. You transition. We'll get the new job. We'll verify the new employment. We'll get the new pay stubs. Same thing. Within 30 days, you're good to go. Okay. So very short period of time. Now, there's going to be some other scenarios, okay? There's going to be somebody that transitions from, let's say, an hourly job or a salary job to somebody that wants to go into straight commission.
Okay.
Okay. That needs 2 years on that job, right? Because you have to have a 2-year history if you're going from something that's hourly or salaried to something that's going to be considered straight commission.
Okay.
Okay, 1099 wages where they don't take out taxes. Or it's going to be just a newly self-employed individual. Okay, that's what we would consider that salary position. Now, let's say you are relocating from another state. Let's say you're relocating from Tennessee into Dallas.
Okay.
Okay. You don't even have to have started that job to close on a home.
Oh.
Okay. If we have the relocation letter from the employer stating that you will be starting your new job within 90 days of when we want to close on your home. And as long as there's no conditions, like you have to pass a drug test or get a license to actually start the job, we'll actually go ahead and close the loan with just that offer letter on your new salary.
Wow.
Okay, as long as you're starting within 90 days. So a lot of different scenarios. So it's really important for us to have a conversation to understand exactly what situation you're in. But don't fret, if you just started a job, if you're going from hourly to hourly or salary to salaried or hourly to salary, we're good. You can start and get closed on a home loan within 30 days.
That's exciting.
Yeah.
Really exciting.
I'm so excited you're excited. Mortgages really aren't that exciting.
We
try to make it
this exciting. And okay, now what if I'm a business owner or like myself, you know, a realtor or
straight commission.
Straight commission. Am I ever going to be able to buy a home?
Yeah, absolutely. So that goes back to kind of what we just talked about previous, which is if you're just starting, I need 2-year history. Okay, you need to be self-employed as a business owner for 2 years. Okay. Now, how we determine income can vary. Okay, so for our business owners, self-employed individuals, we typically have to look at one of 2 things. Tax returns. Okay, so we have to look at your tax returns to qualify. Now, for that hourly or salaried person, we use your gross income. Well, for business owners, we have to use your net income, which is basically everything that you've written off, right? So you make a top dollar, you write off a bunch of income, your business expenses, and then you're disclosing to the IRS what your adjusted gross income is.
Right.
Okay, that AGI income is what we actually have to use to qualify. Now, for some of our business owners, that's perfectly fine and that's enough, and we use tax returns and qualify. Okay. Now, sometimes we can use 1 year tax returns or 2 years. It just depends on how long you've been self-employed. So typically 5 years or greater, we can use 1 year tax return. Okay. Now, let's say those tax returns aren't showing enough income, right, on there. All right. So what we have to do is move to bank statements.
Okay.
Then we can actually take your bank statements that you've been, that you've had, and we'll take and we'll average the deposits that are in the bank statements for 1 year or 2 years. Take that 12 months, divide it by 12, and that would be the income that we would use.
That's
and
nice.
It's a great program. Those will only work for our self-employed business owners.
That's good.
Yeah.
Nice to hear. Okay, next question. With rising rates, how can we lower how much interest we pay on our home? What are some tips that you have?
Okay, no, that's a really good question. So, lowering the amount of interest. What I would look at is quickly paying down the principal balance.
Okay.
So if you make one extra payment a year, you're going to take that 30-year mortgage down to about 21 years. It's going to save you about 9 years worth of interest just by making one extra payment a year. Now, some of those that are out there, you guys are detailed enough to where you can just do it yourself and call ahead and tell the servicing department that you want to make that extra principal reduction payment. Make sure it's principal reduction. Do not send one check with extra principal in there with your normal payment, because the servicing department won't know how to apply it.
Right.
Okay, so if anything, I would schedule 2 different checks going out, or make a phone call to servicing and have them specifically take it out of your account. Or you could just do a biweekly payment program, and that's one way to do that as well. And you'll save, just one extra payment will save you 9 years worth of interest. Yeah,
Great.
It is. It is.
That's nice to know.
It's a lot of interest.
It's a lot of interest. Okay, last question. This is a big question that I get a lot, and I think it's really important. Is it better to rent and wait a year or 5 versus buying now? Rent versus buying. I've been paying.
They say rent or 1 year or 5 years.
1 or 5 or 10. You know how long you end up staying and where you are.
Yep.
Give us some scenarios.
Well, here's the thing I'm going to tell you, and this kind of ties into the other question about with rising interest rates. Guys, do you understand what your interest rate is when you rent? It's 100%. Your rate is 100%. So if rates are at 2 or at 4 or at 7 or 8, it's still lower than 100%. So it's going to make sense to buy for many reasons, but that's a big one.
Right.
Okay. The other thing is, look, you're already paying a mortgage. You're just paying somebody else's mortgage. So if you look at, let's say, rent at $2,500 a month, right? At $2,500 a month for 5 years, 1 to 5 years, you're going to pay in $150,000, okay, in rent. $150,000 in rent.
A lot of rent.
Let's just understand it. Like, when you decide to move out in 5 years, you get none of that money back. You can't sell it. You can't ask for any. I mean, you get nothing. $150,000 gone.
Sometimes you get charges.
Oh yeah. But let me tell you this: if you buy today, to keep that payment close to the same. I mean, let's just get it within a couple $100. If $2,500 payment, $2,650, $2,700. That's going to be about a $325,000 purchase price. Okay, so a $325,000 purchase price with about 3% down is going to run you about $2,650 to $2,700 for a total payment. Homeowner's insurance, property taxes, everything.
Everything.
So you're not, the payment difference isn't that great. But here's the cool thing. In 5 years with a 3% appreciation, you're going to have about $80,000 in equity that when you decide to sell, you're going to get to realize. So for those renters out there, tell me how you're going to be able to save $80,000 in 5 years. You typically don't. And that's the reason why statistics will show that an average homeowner's net worth is 45 times that greater of a renter. And it's only because of cash flow management. They don't understand the forced savings that happens. When you pay a house payment, a portion of it goes to principal balance as well as interest. Okay, that's what's bringing down the amount that you owe. And then appreciation is something you get because you own it, and that's also causing a big gap. And that gap is positive because that's your equity that you're going to get when you sell the home. When you rent, you get none of that.
Right. This is big, guys. This is big.
It is, and we talk a lot about it. I mean, it is one of the biggest things that you guys need to understand and how to create wealth within real estate. I've done it personally. I bought my first house at $60,000 22 years ago with very little to no money. I mean, I traded a honeymoon and all that stuff just to buy a home because I understood how that money works. And we've done well in real estate. And so I would encourage you to take those same steps.
Awesome. Well, thank you. Thank you very much. Yeah. This is episode 2.
Boom. You never know.
Mortgage
Debunked. More episodes may be coming. You never know.
You never know. Thank you, guys.
Take care.